Good morning, guys. Welcome to this Thursday, April 23rd. And this overnight has been something. We had, I believe Tesla earnings came out yesterday. Tesla was up $15 yesterday. They're down 11 now in the morning. So yeah, I guess it wasn't a great reaction to that earnings report. Across the board, there's a fair amount of selling going on in the overnight. And now we're right back up again. So, I mean, I was looking at that late last night and thinking, oh boy, maybe we are in for a risk-off day tomorrow. Because you look at this thing, they start selling off straight down, all the way down here to the 7100, 7105s before they reverse back up again. And right now, we're just taking out the session highs. So go figure, right? So it's a little bit of a paranoid market. That was some sort of a sell-off going on there. And but I would not say, I mean, well, if I get into the my analysis there, the news this morning we have to on tap jobless claims at 8:30, Chicago Fed National Activity Index, 9:45 we get PMI Composite, and then we have a Kansas City Fed Manufacturing at 11. So 8:30, 9:45, 11 we have a nat gas report at 10:30. So again, not a whole lot of news to drive the market. We have a 5-year tips auction at 1. It could be something interesting going on there, but overall, I think market is just still range bound, still biased to the upside. And I guess that sell-off may have to do with the some concern about the Tesla earnings or what that means in terms of robotics or AI, something to that effect. Not sure exactly if that was the only thing there, but that's one of the big ones reported yesterday. So the fact that they're straight back up here again, it just means that the market is still looking past the Iranian thing. They're still focused on earnings report and poised to take this higher. So a day like this, I mean, if we get some early strength and then hammer it in the day session, well, then that would be a bad day. Right now, we can see we have a few days here. They've stalled. The first run up here at the 7180s. Here is a retest. Well, we had not quite a retest the day after. Then we got almost a retest here at the the day before yesterday. And yesterday we were up here retesting that level again, the 7170s. So we're definitely running in some resistance here at the 7150 to 7180 levels. And if they can't bust through it, we're gonna either stay range bound, or more likely we're going to see some people start covering positions and see a little bit of downward pressure, maybe a risk-off kind of a day in the near future here. But right now, there's no reason not to trade this from the long side of the market. So I would emphasize range-bound trading, favor the long side. So not just flat-out range-bound, not just flat-out long side of the market, because we have been churning here for a few days now. So I would look to buy weakness. I would favor that side against the 7145s, the 25s down to the 7100s for rotations back up. Below 7100s, I would start worrying about the short side. Below the 7085, 7075, those we talked about yesterday, we'll have confirmation that we are retracing at that point. And on the way up, looking for shorts against, I was going to say the 65s, but just took it out. So the next one is 75s and the 85s. So these upper areas. Now, if we get a nice little breakout going on here on the ES, that would be nice. It's all earnings driven at this point, I would say, and I'm not. I wouldn't expect the Iranian situation, if something happens there, would probably have a short-term like knee-jerk reaction to it, but you may get some slop like that. But it's overall earnings and the positive outlook is what the market is pricing in right now. And up we go, heading higher. So looking to buy weakness, as I said, against the 45s, 25s, 7100, 7105s. The 70, 85, 75 on the lower end here, if that comes out, start thinking retracement trade back into this lower range, at least to reverse retest of that 70-30 support area. So that would be a next level down here to look for. All right, so fairly straightforward analysis still. range-bound trading, when it looks like it does now in the last few days, we have tested a few times on the upside. We haven't been able to sell off when there hasn't been any willingness to sell off. Even days like overnights like we had now, it was pretty gnarly for a bit. That's a pretty positive sign. So, but yeah, but you have to be mindful. If they can't take out the highs, you're gonna get someone's gonna start covering, and you may see a short-term reaction to the downside at that point. Looking at the Nasdaq, the wrong order there. Yeah, my F1 on the Nasdaq. Here's your Nasdaq. And Nasdaq made new highs yesterday, so they are definitely in price discovery to the upside, and they are pushing that envelope. So tech, AI earnings definitely on fire. Now the Tesla earnings didn't look to made a huge dent, definitely on the sell-off side in the overnight. But we will find out here in the day session if that's going to lean on the market or not. There's plenty of other companies reporting earnings and doing stuff as well. So it could be very well that we have more of the mid-cap, small-cap stocks making big moves. And we'll see how the session shapes up today. But Tesla definitely is going to drag on the Nasdaq. Question is just if it's going to be enough to pull it down or not. But I would start range bound. I would lean on the long side. I would be a little bit more even positive on the long side, even if we have bad Tesla earnings. And they're still laying to stay on the long side until they trade back down below these areas, the 890s, 900s, and the 850s. So these two support areas, if they come out, that's when I'll start worrying about maybe potential retracement trade. Not going to really confirm that until we take out the 550, 560 low volume area. So on the Nasdaq, we got, as usual, a little bit more room, but we have a low volume area right here at the 900s. But it's hard to say that's a low volume area just yet because you had like a day and a half of trading up there. Down here, we have a few more days at the 550 level, and that's a nice low volume area. So that would be more acting as a support area, and I would lean against that guy for confirmation that we may have some negative stuff happening. So let's be prepared. Volatility is definitely in there. So if they start running this lower, there's some room to go on the downside before we need to worry about the short chart of the market on the Nasdaq. But initially, the long bias, you can take that off if they trade down below the 900s and the 850s, these two support areas. I think they're back in that lower distribution at that point. Still take it lower, but I would still look to buy against it all the way down here to that 26,600s. And between that one and the 5 and 600s, that's where you have that low volume area to pay attention to. All right, so Nasdaq, volatile all over the place. But look at that, the price discovery to the upside. It's always great to watch the market when you're pushing new highs like this. Let's be mindful. We had those elevator down days. They can come and they can be pretty darn violent, and they can retrace quite a bit of this in one session. And then those are the sessions that you want to be active in the direction the market is trading, or on the downside, that is. So on the way up, not going to be very aggressive on the short side. The only thing we have ahead of us right now is going to be that 27,100s. Resistance here, and there's not a lot to lean against there. So if anything, I would look for short setups against that when it runs up and stalls, like I did yesterday. Otherwise, I would prefer the long side. The hard part on the long side is on these pullbacks. Sometimes you get it like this, like we're looking at right now. It just doesn't give you any way in. You had to buy this super aggressive to get long against this. Other times you get more of a reaction to the downside. Like you go up a little bit and a pretty good retracement. And it's always hard to find how far they're going to retrace. So lean against that, the tab at pullback. That's a pretty good spot to get long against if you want to be conservative about your entry. If you want to be more aggressive on a pullback, you get in when they start pulling back, and then you prepare to repair it at the tab. And if it keeps going after that, then you just let it stop you out. And you're just flat out wrong on the trade. And if those few times when it goes just enough to stop you out and reverse, I know that sucks, and it's just part of trading, you can never get it precise. You're trading the odds. You're trying to get a good enough trade location, but it's anyone's guess how far they pull back. And like we're looking at right now, for instance, they're pulling back right now, and it looks pretty aggressive, right? So where do you want to start buying it? That's the question mark here. Right now they hit the target already in first standard deviation. So that would be a good spot to put on the first trade. Second trade down here, maybe at the 30s, and then let it stop you out after that. So, and sometimes you get these, and they'll run right over you, like it did on my ES trade yesterday. And you get in on the pullback, and then you repair it once, and literally they just blow straight through the whole thing, and just okay. So there was some news, some reaction somewhere, which caused that to happen. And you can only try to trade the levels we have in front of us, the knowledge you have, and when the market's gonna do these big moves or violent moves, short-term violent moves. Yes, if you're in a trade at that point, just get shaken out on that thing. So, but taking good trades on a consistent basis at least gives you more winners than losers, right? The time you get stuck in one of those reactive things or violent moves, it's going to be a lot fewer times than if you try to take just a little bit less aggressive, a little bit conservative trades on the pullbacks. If you're trying to get on a trend, or you're looking at an edge, you come up and bounce up an edge, just give yourself a little bit more room to potentially get on that trade. So. On the bond market, it's just range bound, same old. So looking to sell strength, buy weakness on that guy. Right now, it looks like support held down here at the 1320s. So right now, I would look to buy against the 1326 and 20s. Look to sell strength at 1408, 1416s up to that 1420s. So pretty straightforward on the bonds, not much to say about it. But yeah, so not much to say about the bonds. If I get a setup looking something like this and it's at the level, so you are at the level, the ideal level, setup and trigger, you start getting those. That's when you can click in an order and see if it's going to work out or not. But on the bonds, you have to be a little bit less conservative because it doesn't move a whole lot. And if you're a little bit wrong on your trade location, you could get stuck twisting in the wind for quite a while. On the crypto side of things, not much going on there either. You can see this flopping back and forth. Silver, nice rally going on silver right now. On gold, say nice rally going from 4,700 all the way up to 4,750. It's been at 50 points on the upside. Pretty good moves on that one. Yeah, I haven't no trades on this one so far today, but these guys I tend to look at on the metals. I tend to look at those in the aftermarket or early evening. Because that's the Asian markets kick in. That's when they start moving a bit in the overnight. It could be interesting to trade if you have nothing else to do in the evening. Like like developing some software or something. But so back to the ES and Nasdaq, and so what I'm talking about when I say retest failure. So you see when it runs up like this, you can try to get on the trend. We talked about that, or you're looking at the end of the trend and. Right now we broke out of the 7150s. We ran out of gas here at that 7165, and of course they ran it a little bit more than that, maybe to the upside. So that's what they're looking for. So if you miss the trend, you don't want to chase it. You wait for a resistance area to get hit, then you start looking for a potential churn or a stall, and then you have an indication here, a balance bar. You have a second balance bar, it doesn't really extend. So at that point, you have a shot at trying to get short up there and see if they're going to get the pullback going. This one wasn't that great of a setup. The better ones is when that third bar starts trading higher and then fails. That's a great setup. But it's if you're at an area of resistance, that's why you try that. If you're in the middle of this, like being aggressive on trying to predict a short reversal or something like that is usually less, the probability probably less for a successful trade. So patience, I'm preaching that to myself. It's the hardest thing to do. Stay patient, wait for the opportunity. Like you're doing right now on the ES, we have a tab button here at the 7155s. That would be your conservative entry point. You know, if you want to get long there, fine. Then you can potentially repair it down here at that low at the 71.50. These two lows, and that would be as aggressive as you want to be on it. And if they keep going after that, then you're flat out wrong on that trade, and you want to be out of it. So anyway, so we have a range bound bias to the upside, a little bit more bias to the upside on the Nasdaq the way it looks. Bond market is range bound, and then let's see how this whole thing develops. Alrighty, guys, we wrap it there. So news in about 10 minutes, and we'll see how that develops. All right, see you back at 11:30 for the next update later.